The VIX dropped below 20 this week. The last time it went this low was back in August, and it caused a 19% correction for the S&P 500. Will this time cause a 19% correction for the S&P 500? Welcome to another S&P 500 analysis. In this video, we'll analyze the price action of the S&P 500 along with the Nasdaq 100, Dow Jones Industrial, and the other major market indexes. Oil, silver, gold, the US dollar, and the 10-year yield, and see where they might be headed. Now, as you can see from this chart here, see back here in August, the VIX dropped below 20 and the S&P went down 19%. And also back here in April timeframe, the VIX also went down below 20 and it caused a 20% correction. So this time it went below this 20. Will it come down 20%? If it does, then we're basically looking somewhere around 3,400 level. If we see a correction of 20%. And looking at this weekly chart of the S&P 500, we see the range for the week was 162.86 points. And it gained 45, close to 46 points or 1.13% for the week. It is still continuing on this one-time framing up, and it closed above the 10-week and the 40-week moving average, but it's still in this lower low, lower high price pattern and also bumping up against this long-term trend line here. So will this cause a correction to pull back? Remember, we saw the VIX went below 20, and the last time when it did that was up here, and we saw it pull back almost 20%. Now let's take a look at this sentiment chart here. As you can see, the VIX is actually went below 20, and on Friday it was somewhere around 19. And also the put call ratio is getting close back dip below the 0.75. So these two sentiment indicators definitely indicating the market participant or getting a little bit more complacent and start putting back risk on. So you can see that the price came up to this trend line here and got a little bit of a rejection. So we'll be watching next week. Will this pullback continue, and will we start seeing this VIX starting to come back up and starting to possibly spike up while everybody is getting so complacent and being so bullish. And on Friday, we saw the S&P 500 is pretty much negative throughout the entire session, but the up-down volume ratio was slightly positive. It was sitting at 1.5 or so in favor of the up volume, and also there were 287 more advancing issues than declining issues, so we got a positive advanced decline. And also we are continuing to see more 52-week high than 52-week low in the New York Stock Exchange. On Friday, there were 42 more 52-week high than 52-week low. And as you can see, the cumulative AD line from New York Stock Exchange is starting to come up, although we are seeing a little bit of a positive divergence from Friday as the S&P 500 finished with a loss, with a small loss, but there were a little bit over 280 stock, more advancing stock than declining stock. So that created a slight positive divergence. And also at the Nasdaq market, we see the Nasdaq 100 actually closed down 0.4% or 47 points on Friday. And the up-down volume ratio was actually 1.2 to 1 in favor of the up volume. Also, there were 712 more advancing issues than declining issues. In the Nasdaq market, there was 29 more new 52-week low than 52-week high. And here we see that the Nasdaq cumulative AD line also show a slight positive divergence versus the Nasdaq 100. So as you can see from the sentiment chart, we are seeing that the market participants are getting a little bit more complacent and also starting to put risk back on. But the internal, although we are seeing a little bit of a positive momentum, but it is not something to build upon until we see some more acceleration in the advanced decline and also the up-down volume ratio, and also getting a little bit more 52-week high over 52-week low. So until we see those momentum on the internal start to build, we need to be cautious about the complacency that the market is starting to adapt to. Looking at the 10-year yield chart here, as you can see, after Chairman Powell made a comment about the moderation of the rate hike policy, could start as soon as next FOMC meeting in December. And so we see that the yield came down a bit here. Right now, it's sitting at 3.5%. But as soon as reality set back in, I'm sure that we'll see it come back up because the terminal rate that the Fed is talking about is somewhere around 4.5 to 5%. And here we also see the U.S. dollar reacting to that lower rate, moderation of the rate hike comment by Chairman Powell as well. And we see that the dollar is coming down and sitting at 104.5. I wouldn't be surprised to see this thing to come down and test this level down here at 103 before we see a substantial bounce back up. And as the dollar come down, we also see the crude oil getting a little bit of a bounce. So right now it's still sitting at this 82 area, still waiting for it to come back up to this 90 area, come up to this high volume node here, this composite point of control here at 88. So we could chop around here as the dollar fluctuate a little bit and sitting here at 76 to this 82 area. But as the dollar continue to come down, I wouldn't be surprised to see oil to start popping back up. And the biggest beneficiary to the weak dollar is the precious metal market. And as you can see from the silver, remember we were talking about silver coming up to this 22. And if it get above this 22, then we're basically looking for this thing possibly come up to this 26 area here. So right now it's getting above that. So we're going to keep an eye on, see what it get up to, at least this level here, somewhere around 24 to 25 area. And if it does, then we look for this thing to move up to this next high volume node here, if we could get to this high volume zone. And similarly for gold, we're talking about gold coming back up. Look for it to continue to push up to this 1839, 1840 area, this composite point of control here. And if we can get above this zone here and get above this point of control, then look for it to push up toward this 1900 area. Now let's take a look at the price action of the indexes, starting with the SP 500 on this daily chart here. As you can see, on the first 2 days of the week, it was pulling back and came down to this lower range of the expected move. Then on Wednesday, when Jay Powell made his comment in the speech about the moderation of the rate hike policy, we saw the S&P 500 shot up and almost came back up to the upper range of the expected move. But it did tag it the following day on Thursday. And as you can see on Friday with the non-farm payroll, creating more jobs than expected, and that could be bad for the rate hike policy or the moderation of the rate hike policy, because one of the things that the Fed is concerned about is the wage inflation, and that the wage inflation is a sticky part of the inflation, and the only way that one could remove that is through a possible recession. So that could be a little bit sticky for the Fed to continue the moderation type of policy if wage inflation continue to move up. So we have to keep an eye on that and watch these levels here. So for the coming week, the expected move on the for the upper range is somewhere between 41.45 and 41.3450. And 4,009 and 39.85. So those are the ranges for the next week. So the scenario that we will be keeping an eye on for potential upside move is to break this trend line, come back and back test it, then pushes up to the upper range of the weekly expected move and possibly come up toward this 4,200 area. And remember, we got a little bit of a gap fill here, so we could see it come up and fill this gap up at this, 4220 area. So keep an eye on that. And also I have a little bit of a symmetry move that also pushes up to this near this 4200 area. Now for the downside, let's say we are getting a little bit of a pullback because of this resistance here from this trend line. Then the first area to look for is to come down, as this particular trend line is also in confluence with this lower range of the expected move, somewhere around that 4,000 mark here. So, but if it breaks this trend line, then look for this thing to come down to this 3,900 area, and that would bring it down to getting close to this gap fill here, somewhere between 3,800 and 3,850. And for the NASDAQ 100, we also saw the first 2 days of the week, it came down and almost went into this lower range, but it did come down and tag it on Tuesday. And again, on Wednesday, when Jay Powell made that comment about the moderation of rate hike, we see it shot up. And on Thursday, it actually came into this upper range before it pulled back a little bit on Friday after the non-farm payroll came out, showing more job created than expected. So for next week, the upper range of the expected move is calculated to be somewhere around 12,310 and 12,253.50. And the lower range of the expected move is between 11,735 and 11,660. And looking at a possible scenario, we could see this could come up to this upper range of the expected move, and that's basically coming up to this trend line here, and possibly encounter resistance and get a pushback down to this lower range of 11,735. The other thing is that it could just continue to come down and get down to this low range and breaks it and dip below this zone underneath the 11,503 and work its way down to fill this gap here, down here at 11,037. And for the Russell 2000, we see the Russell 2000 actually booked this trend line, came back and back tested on Friday and continued to move up. So look forward to come up to this 1900 level here and possibly get up to this 1925, break this zone and start moving up to this 1950 and 1975 area. Now I do have a symmetry move that will push us up to this 1969 area, and that is up at this near this peak here. But on the 80%, we do have it somewhere around this 1937. And for the downside is for it to come back in and dip below this trend line and start moving it back down toward this 1800 level and the 1786, and possibly do this gap fill down here. And for the Dow Jones Transportation, we did see the Dow Jones Transportation got a little bit of a bounce also from the Jay Powell's comment, but it did pull back on Friday. We see that it booked this trend line and is holding above it. So we could see a continuation move up toward this 15,000 area, and that is pretty much inside between this 80% and 100% of this symmetry move here that I have, and that's basically this symmetry move here. And for the downside, we could also see it come back down, dip below this trend line, and start working itself down to this 13,450 area and backtest this supporting trend line. And for the Dow Jones Industrial, the Dow Jones Industrial took out this pivot high here. So we'll see what it continue to move up and get above this 34,800, essentially get up to close to this 35,000 area, and that would be an 80% near this 80% major move of this symmetry move, and the 100% of that symmetry move will be somewhere around 35,500 area. So keep an eye on the Dow Jones Industrial, because that's been the one of the strongest index here. But if it decide to pull back, look for it to come back down to this trend line here, somewhere around this zone near the 33,167. And the New York Stock Exchange Composite Index is also getting close to come back up to this pivot high here. It did see a little bit of a pullback to this zone here, somewhere around this 15,600. And notice that we have this long wick, and it just came right back up and finished with a doji type of a hammer candle. So keep an eye on the New York Stock Exchange Composite. We could see this thing continue to push up and come up to this 16,000 area, which is the close to this 100% of the symmetry move here that I have, setting up on this swing here. So keep an eye on that on the upside possibility, and on the downside is come back in, get below this trend line, and work itself back down to this zone here below this 15,000 area. So with the VIX coming down, will we see a correction on the S&P 500 like we saw back in August and also back in March of this year? Or will we actually see, as the VIX getting lower and lower, we'll see this rally such as back in October of 2021? So will we see this breaking this trend line and this thing come back up for the all-time high? So that's one thing that we want to keep an eye on, but do not get FOMO in. Wait for the market to let us know which direction you have to decide to take. So be sure to smash that thumbs up to help me promote this video. Thank you for watching and stay safe.